Hello and welcome to our weekly look ahead at the markets and several big events coming up. First up, we have the Apple product launch on September 12th. Now we think that's almost certain to mean that Apple iPhone 15 is going to be unwrapped to the market. That's a big event. We're also expecting some other updates around wearables and in particular the Apple Watch. Also perhaps a new iOS operating system. Now this is going to be important for Apple because it's coming into some headwinds as we saw last week with reports that China might be banning its government officials and potentially even workers at government-backed companies from bringing iPhones into work. Now this may be a coincidence, but it's probably not a coincidence that Huawei's just launched a new flagship device. And the Chinese may be just nudging their domestic consumers to buy Chinese rather than American, but we'll wait and see. There is also part of a tit-for-tat battle between the US and China. It's been going on for several years now with the trade wars and technology, and we've seen sort of curbs on chip exports and so on and so forth. So part of that long-running battle, but it's not an immaterial threat to Apple with sales in China, about 50 million iPhones annually, about 20% of annual revenues from the Greater China region. So keep your eyes on that one, keep your eyes on this Apple product event coming up on September 12th. Also, the big one for the week really is the ECB on a bit of a knife edge as to whether the ECB wants to hike interest rates one more time or not. We've heard Governing Council member Class Not saying that markets may be underestimating the likelihood of a hike this week. Certainly in July, Christine Lagarde and the Governing Council kind of switched off autopilot and started to take control a bit more actively, and they left a hike very much on the table for September but didn't pre-commit to one. Markets guessing as to whether or not they go for one. I think if they do, it's probably potentially the last one for a while. They'll look to hope that that's the end of it. They've got a muddy picture in terms of the economic growth outlook. PMIs are cratering. Q2 was revised down to 0.1% from 0.3% last week, and 1 year ahead inflation expectations have actually risen just a touch. So there are a very muddy picture for the ECB, and we'll get some more clarity from them this week. Elsewhere, US CPI numbers, now they were up 3.2% annually last time out. They were up 4.7% I think on the core. Coming down is really the story there. So coming down, maybe slowly, but still on the whole just about coming down. Overall, the trend overall coming down. So we'll look to see whether there's any more signs of disinflation. I think, sort of 3% headline CPI number is the sort of level at which the Fed will be happy to cut the engines in terms of its hiking and allow the plane to glide in. The long and variable lag effects of rate hikes still to be fully felt. So in terms of the expectations around the Fed in September, it also has a meeting in September on the 20th. It will be paying close attention to those CPI numbers. We have seen mixed signals from the jobs market in the US over the last couple of weeks. There was that sort of Goldilocks non-farm payrolls, and we had last week weekly unemployment claims fell to the lowest since February, signaling robust health. Also, the ISM services PMI last week was also pretty strong. The prices index also quite strong. So that's feeding into a sort of mixture of emotions around the Fed and what it's going to do. But it's less about whether or not it hikes in September. I think they won't hike in September. It's more about whether or not they're going to signal in November signal that they're potentially going to go for one more in November, and that will come down to the dot plot. So keep your eyes on that one. That's a couple of weeks away though. For now, we're looking at the CPI numbers from the US. Also, watch out for some retail sales numbers. There's some important labour market data from the UK this week as well. That'll be important because it will be instructive for the Bank of England a week afterwards. So lots of data out there. Apple, China, lots happening. Keep your eyes on oil, keep your eyes on Treasury yield. 10-year 4.34% is the key breakout level. S&P 500 4350 is probably our key support level. That's the neckline of the Head and Shoulders top. We'll be keeping an eye out for that one. Thanks for watching.